Are you prepared to manage your investment on your own? Recently, the stock market has been abuzz with talk about Journey, the massive Tesla electric car company. Many have been pondering whether now is the right moment to buy because of its ups and downs. Time is everything when investing, and this could be the right moment to work with the storied EV producer. A wise investment made now could pay off handsomely down the road, and who knows, could even allow for an early retirement. You've heard it said before, instead of waiting for the ideal time, create it. Come discuss the current status of Tesla stock with us and get insights from professionals in the field about when it might be best to invest. Before we go any further, don't forget to hit the like and subscribe buttons. Then, buckle up and get ready for the journey of your financial life. When would you purchase Tesla stock if you had to do it right now? Industry analysts claim that the performance of Tesla stock has underdone. Despite Tesla price declines during 2022 and into January, investors have been piling up on the company's shares for months. The price of Tesla's stock increased dramatically in February. Renowned investor Cathie Wood has been accumulating stock in the desert. Her investment for ARK Investment has been purchasing Tesla shares every time the stock reaches a record low, giving the impression that she is even on a dip-buying binge. Despite the challenging year for Tesla shares, many analysts concur with Cathie Wood that investors should seize this opportunity to purchase the stock at a discount, even though Tesla is trading at a level that may not always reflect a company's fundamentals. While Mark Newton, the head of technical strategy at Strat Global, believes that Tesla is a sound company, he concedes that some investors have lost faith in the stock because of market volatility and other factors. Newton stated in a recent interview that buying opportunities will continue to present themselves. When Newton discussed in his early January CNBC appearance when Tesla stock gets down near $100. By the end of the month, there will be some things that will line up that suggest the stock is trading a buy, and it could have a very sharp bounce for Newton. The opportunity will present itself the moment when Tesla announces its earnings. At the end of the first week of January, Tesla stock was trading at about $113 per share, but has gone up almost double in February. A few days after the aforementioned CNBC interview, market technician and fund strategy managing director Mark Newton told Yahoo Finance Law that he thought Tesla was officially oversold. "I'm expecting a bottom of less than 100, he remarked. "Several of my models indicate that there may be a bottom shortly before Tesla releases earnings at the end of the month. Following this, the stock may rise throughout the spring." The electric vehicle manufacturer's shares have decreased by 65% in the last year, but they have increased by 10% to 20% so far in 2023. The risk of an operational miscusa is the first of numerous variables that, according to Newton experts, have contributed to this startling decrease. Tesla has grown as the business has evolved, and despite these concerns, Elon Musk is focused on it as the newest company in a stable. Similar to Fundstrat's Newton, some people on the street are becoming more comfortable with Tesla stock, and we believe that the Q4 setting is better than it was last year. Second, worries about production problems and the rate of Tesla sales in China persisted in the face of unclear COVID-19 policies. Lastly, the competition in the U.S. EV market has only gotten stronger this year, increasing the likelihood that Tesla's growth will stall in 2023 and beyond. According to a recent client note from Citi analyst McKeely, real negative causes are what are driving the most recent sell-off. We anticipate that the Q4 results won't be sufficient to allay worries about China's competition for market share or other issues that soured sentiment in December. Therefore, the timing and introduction of new or updated models in conjunction with the quarterly report during the Investor Day on March 1st may offer much-needed clarity and a helping hand with these issues, and may even temporarily increase consumer confidence outside of Tesla is also starting to shift their perspective. We think Tesla can capitalize on this growing market with its upcoming product debuts, which is why Edward Jones raised Tesla stock in the first week of January from a hold to a buy. According to market analyst Jeff Windu, we think that the current price of Tesla's shares does not accurately reflect the company's potential for long-term growth. I am aware of two investors who have made similar comments. Because of Elon Musk's time spent monitoring Twitter and concerns about slowing economic growth, the price of Tesla's shares has fallen dramatically over the past year. Global rules will, in our opinion, drive the growth of the electric vehicle sector, despite the potential short-term pressure on auto sales. Although global regulations pertaining to emissions and mileage are driving the expansion of EVs and competition is intensifying, We believe Tesla will continue to hold a significant market share in international markets as long as its management team is able to execute the company's current operational plans. Analysts think that Musk's decision to leave Twitter will be advantageous. In addition, Tesla is aiming to lower costs and increase manufacturing efficiency. The company is also hoping to improve profitability by focusing on software and subscription-based programs like fully autonomous driving. Dow expressed optimism that Tesla will be able to take advantage of this growing market. The analyst stated that given the impending product introductions, we feel that the stock price of Tesla does not fairly represent the company's long-term growth process in the market, partly due to shifts in investor sentiment regarding Tesla's future, which is dependent on advancements in the electric vehicle space. In a note to clients, the marketer stated that the company's stock price fluctuates more than the market average and that, given the company's potential for long-term growth, Tesla stock appears inexpensive. He also mentioned that he anticipated the launch of Tesla's fully autonomous vehicle later this year. Although Wendy acknowledges that the stock movement this year has been noteworthy, he believes that Tesla's beta will keep getting better in tandem with the company's EV batteries. The impending Cybertruck and the possible later year introduction of an improved Model 3 design are among the new products scheduled for release this year. For Tesla to succeed in the future, it is essential that it continue to be a part of the electric vehicle sector. One can pursue prosperity just as one would any other commercial endeavor. Due to greater than usual swings in investor sentiment, Tesla's price varies more than usual in both directions. According to Mark Newton, an investor in Tesla and an authority on foreign stock markets, investors shouldn't rely on our comeback in a short while, per a recent interview with CNBC. For short-term investors, Newton stated that in order to believe that a significant rally will begin, we must rise nearly above the level where it was broken. In November, the stock began to decline and reached a low point of about $206 per share. Newton may have raised $700 billion in market capitalization, but the stock has since rebounded to about the same levels and appears to be quite stable in the midst of Tesla's terrible fourth quarter, during which the price fell 60% in less than 4 months. Investors just cannot operate in that manner, Newton cautioned. Tesla CEO Elon Musk, who sold his Tesla shares to fund the company's $44 billion acquisition of Twitter's assets, mostly covered the client despite the electric vehicle manufacturer missing its profits objective in the third quarter and falling short of production and delivery targets. Since coming public in 2010, venture has caused significant unease among Tesla investors, with some calling for him to leave the social network business due to mounting criticism of his leadership style and political tweets and memes. The business is currently experiencing its biggest sell-off, but analysts have noted that Tesla may benefit from Musk's pledge to resign as Twitter CEO after a replacement has been selected. Newton says there is no chance of a substantial resurgence in the near future. 2 months ago, bearish calls were made public, which made the stock's fundamentals weak. Wall Street's biggest mistake in a bear market is to purchase dips on anything that's down 50% or more. If 2022 taught us anything, it's that this isn't necessarily a sensible approach. When Tesla releases its fourth quarter earnings at the end of the month, Newton noted that while there might be a very sharp increase, it was premature to consider that amount. This could present an opportunity for investors to make a purchase. He went on, a 10% decline in a stock price through January may leave room for a 30 to 50% recovery, and we're just seeing the beginning of it in February, even though there is still a short-term downside. Please hit the like and subscribe buttons if you like the video. I'll see you in the next one.